Now let's talk about a warning sign flashing across global markets. One word that is shaking stocks, that is making investors jittery: artificial intelligence. But it's not the power or promise of AI that is making everyone nervous. It is the fear of an AI bubble. Tech CEOs are talking about it. Banks are warning about it. This is the biggest tech boom since the dot-com era, and it is now facing its first real crisis of confidence. Trillions have been bet on AI, but have we gone too far, too fast? To understand that, let's go back to where it began. In 2022, a quiet storm hit the internet, a chatbot called ChatGPT. It wrote essays, it did coding, and it cracked jokes. We thought we were looking at a fun toy. Turns out we were only scratching the surface. Fast forward 3 years, and AI is not just a buzzword, it is Silicon Valley's favorite term. From Wall Street traders to Silicon Valley founders, everyone has been betting big on one thing: AI being the future. For 2 straight years, the Valley's champagne never stopped fizzling. Startups minted a lot of money, valuations skyrocketed, there were billion-dollar announcements every week. Then suddenly, things began looking a little shaky. The fizz gave way to froth. And last week, global markets plunged. $730 billion were lost in a day. $730 billion in one day. The Nasdaq went down. Asian markets were in the red. It looked like investors had finally taken off their rose-tinted glasses. The AI hype was great, but there was also a question looming. Is it really a boom or a bubble? Like I said, ChatGPT burst into the scene in 2022, and since then, AI stocks added more than $17.5 trillion in market value. You heard that right, $17.5 trillion. That's roughly 75% of the S&P 500's total gains. This is a list of 500 largest publicly traded companies in America, the S&P 500. And if that wasn't enough, companies made eye-watering pledges. There was $500 billion for the Stargate project. It involved OpenAI, SoftBank, and Oracle. NVIDIA and OpenAI came together for a $100 billion deal. NVIDIA became a $5 trillion company. Microsoft poured billions into OpenAI, and China was not far behind, of course. Tencent and Alibaba, the Chinese giants, ramped up their spending to meet Beijing's 2030 AI supremacy goal. So companies betted big on artificial intelligence, and billions were poured in. It was like AI was the next electricity. But by the middle of this year, the cracks began to appear. Corporate AI adoption began slipping. And this is according to a US survey. It shows AI usage at large firms fell from June to August. It showed the fall. Companies are also becoming more cautious, especially about AI hallucinations. Then there's the balance sheet. Some numbers feel fictional until you check twice. OpenAI's revenue last year was $3.7 billion, and their operating expenses, $8 to $9 billion. This gap may only grow wider because by 2029, OpenAI is set to spend $129 billion. But where is the return? Currently, they're betting on AGI, artificial general intelligence. But that is still a few years away. So until then, OpenAI will be burning money. And that's the case with most AI companies, in fact. One economist estimates that AI capital misallocation may be worth 65% of US GDP. 65% of US GDP. Then came the wobble. A week of shaking knees on global markets. Nasdaq was down by 2%, S&P 500 down by 1%. Every single Magnificent Seven stock was down. That's NVIDIA, Apple, Amazon, Microsoft, Tesla, Alphabet, and Meta. Together, they're called the Magnificent Seven, and they all fell. Palantir fell by 8%. SoftBank lost $50 billion in a week, and even bank chiefs joined the choir. They said, we should be alert to an AI bubble. But what exactly is a bubble? Well, think of a bubble as financial FOMO. That's the fear of missing out. It usually starts with a big idea, say the internet or crypto, and now AI. Money floods in, valuations skyrocket, founders speak in metaphors, analysts nod vigorously. Everyone believes that they're staring at the future, and everyone wants a piece of it. So prices rise because of expectations. But suddenly, one day someone asks, is it really making us any money? And that's when the bubble becomes apparent. Confidence trickles out, money follows, and suddenly it's no longer the future. So is this really an AI bubble? Well, the answer is both no and yes. No, because AI is the future, that's undeniable. It will change the world. In fact, it already is changing the world. Also, artificial intelligence is powered by real tech. That's why the no. But also yes, because AI is still not making money. Investors have put in billions, but the real gains, if they come at all, may take 5 to 10 years to come. Meanwhile, the costs are ballooning. So like I said, we're in the messy middle. The hype is cooling, the money is sweating, and the technology is still taking shape. Will this end like the dot-com bust? Or is this just a mid-course correction before the next big leap? We will have to wait and watch. We can see that the market is issuing a warning, but we are not sure if Silicon Valley will listen.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all three just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.